What's up, my fellow day traders? Welcome back to my channel. I am making a video to follow up to my last video that I posted on January 12th, 2022. I will link the video below where I discuss how I've been getting bullish or bearish on 0 DTE days. As a reminder, I've been using this opening range breakout strategy strictly on the ticker SPX, and I'm always opening my trade by selling to open a 5-wide vertical credit spread. It's roughly about $300 to $400 of buying power required for every one contract. I have gotten a crap ton of emails and messages and comments from you all sharing your successes with the strategy, your losses, your struggles, and your questions. So thank you for sending me your feedback, and let's keep it going. So I ended my last video 4 trades into January, and I was down $500 and something. This is how I ended January. I'll put it on the screen. I did recover those losses. I survived the month with a $915 gain. I know that does not sound exciting, like, wow, it took you a month to make $1,000, but with my contract sizes, I'm only risking $2,000, and I feel like I got a return of 50% of that. And January, I'm just grateful to come out of January green. If you know, that was an exceptionally volatile month. It still is volatile, but scale up if you want to, but my contract sizes keep me sane, keep me zen. I never sweat bullets. I can enter my position and walk away from my computer. I can trade from my phone. And I just don't think a lot of day traders can say that. I have the capital to trade 10 times what I'm trading, but I don't need to boast or flex huge P&Ls every day. My flex is consistent profitability, never having huge losses, simplicity in the stock market. My flex is staying solvent and profitable during times of incredible stock market volatility. I'm going to put on the screen what my February ended like. I had a much better return in February despite having 4 losers. I did the trade 21 times and I ended the month up $2,045, or 98% return on my margin. Let me help you try and understand the trade better. By the way, I do get on Instagram 3 times a week and break down the trade after I've taken it. So follow me there if you'd like to, or I have a private community where I am posting my entries and exits live. The link is below. I'm going to go over 5 different scenarios from February. So one where I traded both the first breakout and what I'm calling the second breakout. 2 where the second 15-minute candle breaks the first candle to both the upside and the downside. 3, my first and only second breakout loser. 4, me trading this on a 1 DTE day, which I sometimes do. I trade it almost every Monday, Wednesday, and Friday, and some 1 DTE days. And then lastly, just a break-even day. They're all 60-second recaps, so let's get into it. All right, here is the chart from yesterday, Wednesday, February 2nd. The first 15-minute candle is done forming. Mark off the top, mark off the bottom. You can see that the second red candle breaks it to the downside, and I sell a call credit spread, anticipating a further move to the downside, which we get, and I capture 35 cents without too much of an issue. And then I leave my desk. I set an alert for if and when the top side gets broken, which it does around 9 a.m. I sell a put credit spread and capture 35 cents, anticipating a further move up, which we get, and that works fine. So that was an easy, good day. I'm going to talk about why I decreased my profit target later on in the video. What's up, friends? Here is the S&P 500 in 15-minute candles. When the first candle is done forming, I mark off the high and I mark off the low. You can see that the next candle, this red candle, breaks it to both the upside and to the downside. And even the third 15-minute candle breaks it to both the upside and to the downside. But this morning, the this candle broke it to the upside first, which was my trigger to sell a put credit spread. I told myself this morning, I do not want to be in a put credit spread. If it breaks it to the upside first, I'm waiting for the second breakout. Why did I put on a small position? I don't know. I did, and then I got stopped out very quickly. I want to say like 10, 12 minutes after I got into the trade. So I stopped out a little bit before 1x because I just did not want to be in a put credit spread today. I shouldn't have gotten in at all. And at the same time I was getting stopped out, I put on a call credit spread because that was the second breakout. Second breakout wins again. I capture 35 cents really easily, and the market is continuing to sell off. All right, my stop loss rule is 1x. So if I sell to open the spread at 95 cents, as soon as I see the mark hit $1.90, I'm setting up my closing orders. And most times the spread is like 20 to 30 cents wide. So of course, when I am buying to close my spread, I want the lowest debit price. So sometimes I do wait, a little bit to get a lower closing price. But do not, at that time, try and convince yourself that the trade is going to go back to break even or profit. Why do you have a stop loss rule if you're not going to honor it? Just stay disciplined. You were wrong. Honor your stop loss rule. All right, friends. So here is where we opened Friday morning. Here's where we closed Thursday afternoon. So like I said, very little surprise there. Here we are, 15-minute candles. Mark off the top, mark off the bottom. You can't tell from this time frame, but it does break it to the bottom first, like I said, but very, very, very tiny, like an 80 cents break, which of course I ignore and I wait for the second breakout, which is to the upside. I sell a put credit spread. I get short some strike around here, and I expect movement up and for my put credit spread to decrease in value. I don't get that. The following three candles continue to give back this big green candle, and I get stopped out of my trade, I think somewhere around here. I was in my trade for about an hour. I sold to open for 95 cents. I cut my trade when the mark tapped 80, but I ended up getting filled at $1.65. And I realized about a $450 loss. So this coincidentally was when that Ukraine news was happening, but I don't know. Is it a coincidence that the Ukraine news comes out 30 minutes after the market opens? What even time is it over there? I don't know. So the market has really continued to sell off. Good thing that I stopped out of my trade. Otherwise, I would be in big, big trouble down here. All right. So that was the second breakout loser for me. To date, I have traded it 23 times and it has won 22 times. I know I didn't mention it in that video, but when the third breakout happened, so when it came back down to the downside, I did put on a call credit spread and it worked fine. All right, here is the 15-minute chart. When the first candle is done for me, I mark off the top and I mark off the bottom. The first breakout was to the upside, which would have triggered a PCS. However, I didn't take it because one, I didn't want to be bullish today. And two, I thought if it broke here, it might get to here and then pull back. But it does push up a little bit further, and I'm not sure if that would have been enough to capture 35 cents. I don't think so. So anyways, I wait for the second breakout, which happens here. I sell a call credit spread. I got short the 43.60 and I waited to capture 30 cents, but also wanted to be out before the president started. So on that one DTE day, I ignored the first breakout. I only traded the second breakout. I took profits at 30 cents. The president was speaking that day, so I remember wanting to get out. I said I wasn't sure if the move up was enough to capture 35 cents. I did check back and there were other members who did report locking in 25 to 30 cent profit targets. So on a 1 DTE day, you need at least a good 25, 30 point move up to capture like a 30 cent profit target. All right, so here is the 15-minute candle for today, Friday, February 25th. When the first candle is done forming, I mark off the top and I mark off the bottom. You can see that the second candle breaks it to the downside, which triggers a call credit spread. I'm expecting further downside. I got short a strike right in here, 4345. I end up getting stopped out because I don't get further downside. Instead, it bounces nearly perfectly on this gap.
perfectly on the gap and then reverses to the upside for the rest of the day. So when this break happens on this candle, the second breakout, I do get short a put credit spread, and I close it after I capture 35 cents. I kind of thought we were going to get a lot of chop around here, but anyways, I'm just in the habit for this short while where the VIX is this high to just take profit at 35 cents. But of course it does go worth it.
Okay, so I lost the first breakout. I won the second breakout. It was a break-even day, but I wanted to put something in perspective. I went back to my January video, and in that video I had gone over a week's worth of ORB trades, and I used the trading week of December in 2021. I'm going to put it here on the screen. Look at the range. The entire week, the SPX traded within a 75-point range. Now, let me share the last week of February of 2022. I'll put it on the screen. SPX had a range of 275 points. So, guys, this is wild. These are wild swings, intraday, overnight. It's tough. So if you've been losing, give yourself some grace. This is not easy. Look at the VIX levels. They're incredibly high. I feel like they're as high as when they were during the Corona crash days. So until the VIX settles down, which for me is like, I don't know, 22 or lower, my priority is to decrease the time in the trade, to just get in and get out. So previously I was aiming for a 50-cent profit target, and now I find myself settling for 35 or 40-cent profit targets, which is fine. You know, nothing is worse than seeing your winning trade turn into a loser and then taking a loss in it, making a U-turn right before it hits your profit target. That's the worst. So maybe I will increase my contract size, take half off at 35, half off at 50. We'll see. Day trading in this environment requires a level of emotional discipline that I just don't think a lot of people have. And I don't think a lot of people talk about that enough. You know, for me, the only way that I can trade without emotion, or do my best to trade without emotion, is to trade very mechanically, follow very simple but strict rules. I use simple rules, so I will stick to them. I take position sizes knowing exactly how much I could lose. And then whatever that number is, it's a number I'm not losing sleep over. It's a number that's easy for me to accept that I was wrong, close it, and move on. So stay disciplined out there, friends. I will follow up in another couple of months. If you have any questions or comments, of course, leave them below. I appreciate everyone's support. Thanks, guys. Bye.